Hey, it's Rick with market update for Tuesday, August 22nd. Um, as usual, we have the daily of the S&P 500 here on the right and the weekly on the left. We're still in a bull market. The 40-week moving average is trending up, but we are in a state of correction. And we've now gotten below and we're living below the 50-day moving average. So some caution is warranted. I would recommend that investors just be about 50% invested and 50% cash, or perhaps even a little bit more cash, because I think we're going to have some more downside to come, which I'll get to in a minute. August and September are historically weak months for the market. So as to say, this is the S&P 500. So it's down, was down today only a snick. It was down about 0.3%. Still just basically even for the week so far. The interesting thing is if you take the equal weight S&P 500, it shows quite a different picture. This decline is much steeper. We're now down around the 200-day moving average and the 40-week moving average. So what's really propping this up is the is the so-called Magnificent Seven, the big cap stocks that are still, I mean, they're down a bit in the last little while, but it's the rest of the market. The market breadth is just not there. So unless you own the big cap stocks, you're feeling some pain in your portfolio. So differences, just speaking of those, I've take a quick look at them. I've got a little list of what I call the Magnificent Seven. And they're all up for the week. Tesla's up 5%, Apple's up 1.2, Google's up 1.5, and so on down the piece here. So they didn't have a particularly good day today. They're still having a lot of strength. So it means the rest of the market, the other 493 stocks that comprise the S&P, are just not performing well. So same situation if we look at the QQQs. Oh, the other thing I want to talk about is this notion of relative strength. So and that's evidenced by these this little part of the chart at the top here. So if you're in blue, this is the QQQ we're looking at, and this is comparing it to the S&P 500. So for some period of time, many weeks, QQs have been outperforming the S&P 500 on a weekly basis, and on a daily basis. In recent weeks, it's actually underperformed slightly. So this will make a little bit more sense when we look at some individual stocks. But so that's that situation. Now the small caps didn't have a good day today and haven't had a good week so far. They're down even more. They're right down to the 200-day moving average, and this moving average is now starting to flatten out. So, and again, you see the relative strength line. The small caps relative to the S&P 500 are really badly outperformed. And so any of you own the IWM, I would set some pretty good stops, some close stops here, because it could get a little bit worse. Let's go back to my prognosis for S&P, where I think we're going. As I said, September historically is not a great month. And so this is kind of what I drew this out on the weekend. I think we're going to end up at the end of September somewhere down here. I extended this 200-day moving average out. I think we're going to come down to it, and this drop is about another 4% from where we are today. So it's not the end of the world, but if you have a choice between being fully invested and losing 4% or being in cash and making a little bit, I think I'll opt for cash. So with this in mind, I've been lightening up in my positions. So looking at relative strength, just if you want to own stocks, you want to find stocks that are going this way while the market has been going this way. And so, and in a perfect world, the stocks in your portfolio are actually doing this. So despite the market, they're either staying flat or they're going up. And this is what I'm continually looking for in this kind of a market. When the market's going down like this, I'm constantly scanning for stocks that are holding their own because there's a much higher probability that when the market turns, and I believe it will, I believe we're going to have a really good October, November, December. In fact, we could even test the all-time highs, I think, before the end of this year. So those stocks that have been holding their own have the highest probability of being really big winners. So if the market ends up going down 10% and then comes back up 10%, any stocks that are doing this are going to go up 20, 30, 40%. So this is the time to be looking for stocks that are holding their own. So I'll just give you an idea. I've got a few positions. None of them are really big. Got some positions, and I'll give you some idea of what I'm looking for. Where is it here? My favorites. So these are ones that I own. AIR. Just draw this back out here. So again, this relative strength bar up here really shows it very well. It's performing. It has since 1st of August outperformed the S&P 500. It hasn't gone anywhere. It's basically gone flat. But that's way better than the chart you saw, the S&P 500 that just ended up down here somewhere. So I'm a little early on this one. I haven't really, well, I had a good day today, so we're up a couple of percent on this one, but it's still kind of early. Here's another good example of a stock that is just going sideways while the market has gone down. Now, because I won't bore you too much, but I bought this one at $58.40. But really, it's kind of a stupid entry because the best entry is when this gets over 60. So you might say, well, hey, you got it cheaper. It's true. However, the probabilities of it failing are higher when we're in this mess in a down market than when it goes out above and takes out its all-time high. Probability of it keep on going is much, much greater. So thinking that the market's going to go down, I did trim half this position to reduce my exposure today, and I'm quite willing to buy it back and more if we get over $60. I have one Canadian stock in my portfolio. I don't have Canadian data on here, so we have to use. Fortunately, it does trade on in the U.S. side. The company is Celestica, but the same thing. You can see this. This is gapped up on earnings, been going sideways, and now looks poised to go higher. So if we get the market with us, this thing could rip. CXM is one I entered here. Oops, as soon as it loads, there we go. I entered this yesterday on the breakout here. And it's had a nice day today. I think it's going to chop around in here to around the $15 area and then explode from there. So it's my hope. FIX, same thing. I think you get the picture here. See, all of these stocks that I own and that I'm looking for have something in common here. They're going sideways or they're going up while the market is going down. So I have a much higher probability of catching on to a decent winner if, as and when the market decides to go back up. A couple others. This one I bought yesterday when it broke out of here. This is the classic pattern that I've been preaching for you to look at. After an earnings gap up here, let's just move this. It went higher, got rejected, came back down. This move, actually, this is a little sloppy in here. This is much deeper than I would like normally, but anyway, it comes from here down to here. Next time it goes up and tests the highs, it only can come back this far. And then the next time it goes up and tests the highs, it only comes back this far. And so this is a classic case where if it gets above here, which it did, I bought it, and 1, 2, 3, fourth time is lucky or a charm, and we're off to the races. So this, if I can't stress this enough, for you that looking at charts, this is a pattern that you absolutely need to memorize and study. And if you only trade one pattern, this will make you a lot of money. And then one more, I think. Yeah, basically a similar kind of thing, but very sloppy. I got this in down here a couple of weeks ago, 8th of August. Scaled out of a bit. And I'm tempted to buy it back, but the fundamentals just, its earnings per share are not growing. Sales are only growing by 6%. So there's a few things about their fundamentals that I can't get really excited about. So I'm not going to add. I'm just content with what I have. So again, though, if I would just go back quickly, just focusing on this area up in here, where this is hugely outperforming the S&P. I didn't talk about VRT, but I have this one as well. Same thing. This has been outperforming the S&P for months now, or since May. Fix, I think, has been outperforming. Yeah, it mushed around in here for a while. Now it's started to outperform. So again, I can't stress this enough. This is what you should be looking for. I'll give you some examples of. I know there's some of you that own a couple of stocks here. I know that I'll pick a couple that are Canadian, but they trade on the U.S. exchange. Let's take the Royal Bank and see what the relative strength of the Royal Bank is to the. Yeah, okay. Why would anybody have this in your portfolio when it has underperformed the S&P for God knows how long has the weekly gone on like this? Yeah, since the February of this year, it's underperformed. And has a chart like that. Yeah, sure, it's going to come back at some point, but this is absolutely dead money for probably months to come. So one of you, I think, owns BlackBerry. Same thing. See the relative strength, way underperforming the market. So this should be no part of anybody's portfolio right now. Okay, I think that's enough said for today. So keep your powder dry. I would be just about 50% invested. Even go even lighter if we do get a drop over the next few days, because September I don't think is going to be a pretty month. If we're wrong, well, we just buy it back. Simple as that. So, okay, right. Hope this was helpful. Thanks.